Ladies and gentlemen, thinkers of wealth, students of history, and travelers of time, I invite you today to step into a story bigger than markets, deeper than economies, older than nations. A story written not in ink, but in glittering metal, gold. Gold is not merely a commodity. It is a witness. It has stood through war, famine, empire, collapse, prosperity, and rebirth. It survived Rome, Babylon, the Ottomans, the British Empire, the rise of America, and every financial revolution humanity has known. Gold does not bow to politicians. It does not respond to interest rates. It does not shrink beneath inflation like paper money, and it never asks for trust because it is trust. When we talk about wealth, we talk about dollars, stocks, crypto, real estate, and bonds. Yet every one of them has fallen victim to the tides of history. Currencies died, markets crashed, empires dissolved. But gold remained the final breath of value when all else failed. And so today, we do not simply talk about gold. We understand why gold always wins. This is not a speech for traders. This is for thinkers of cycles, observers of history, and architects of the future. Because to understand gold is to understand power, risk, psychology, human nature, and the ultimate meaning of wealth. So let us begin. Gold was not chosen accidentally. No king, banker, or government invented it. No committee voted upon it. Gold earned its throne over thousands of years through the simplest test of survival. What can hold value through time? Think about it. Thousands of commodities existed: grain, cattle, bronze, leather, salt, shells. But grain rots, animals die, metal rusts, leather decays, salt dissolves. Gold endures. It does not rust. It does not corrode. You can bury it for 1,000 years, return and find it shining like the day you left it. Humanity needed something that survived time, not months, not generations, but civilizations. Gold was rare enough to be valuable, yet common enough to be accessible, beautiful yet practical, scarce yet divisible, portable yet eternal. A farmer in ancient Egypt, a merchant in Persia, a warrior in Rome, a banker in Renaissance Italy, a trader in Wall Street today, all accept gold without a word, because gold is not currency, it is language. To understand gold, you must first understand fear and trust. Every paper currency ever created eventually faded. Every empire-backed note, whether Roman denarius or German mark or Zimbabwe dollar, fell victim to the same disease, inflation. Governments print money to solve problems. People celebrate short-term relief and ignore long-term collapse. They trade the future for the present because they believe consequences come later, not now. But gold cannot be printed. It cannot be manufactured. It cannot be printed to pay debts, fund wars, stimulate economies, or win elections. Gold forces discipline. Gold is the anchor of responsibility. And this is why governments fear it. Because gold exposes truth. When people lose trust in currency, they return to the only thing that cannot lie: gold. Gold is recession-proof, panic-proof, war-proof, because human beings always run towards safety before chaos. When the economy booms, people chase profit. But when the storm hits, they chase preservation. And every time across history, across continents, the destination is the same: gold. History is not random, it is cyclical. Every empire follows the same arc. Born from strength, grows through productivity, expands through confidence, overreaches through debt, collapses through currency devaluation, and citizens flee to gold. Rome debased the denarius to fund their armies. The Spanish monarchy drowned itself in borrowed wealth. The French monarchy printed until bread cost a lifetime of wages. Weimar Germany's currency collapsed until wheelbarrows carried notes instead of value. In every case, gold disappeared first, not because it lost value, but because people hoarded it like life. History does not repeat, but it rhymes. The world today still prints, still inflates, still expands debt beyond logic. We live in the era of comfort, the illusion of endless growth, the belief that money is infinite. But gold stands as a reminder. There is always a reckoning. When trust breaks, gold speaks. Look closely. Governments tell the public gold has no yield, no interest. They say it is outdated, primitive, unnecessary in modern finance. Yet central banks buy gold aggressively. They do not buy Bitcoin for reserves. They do not stockpile dollars for emergency collapse. They buy gold. If gold is useless, Why does every powerful institution hoard it? Because they understand cycles, they understand risk, they understand that when currencies fail, gold becomes the reset button. Gold is the hedge against arrogance, the insurance against collapse, the one asset that needs no signature, no institution, no promise. Gold is wealth without counterparty. You do not rely on a bank to honor it. You do not rely on a government to back it. Gold is self-backed. The wealthy do not buy gold to get rich. They buy gold to stay rich. When the world shakes, gold rises. Not because gold changes, but because everything else falls. Think of 2008. Stocks crashed, banks collapsed, millions lost homes, currencies devalued, nations debated rescue versus ruin. But gold climbed. Think of wars. When bullets fly, trust dies. When borders fall, economies bleed. But gold slips quietly into pockets, across borders, across worlds, across futures. Gold needs no passport. Gold is not a number on a screen. It cannot be deleted like digital balances. It cannot be frozen like bank accounts. It cannot be hacked, erased, restricted, or negotiated. In chaos, gold is freedom. When you hold gold, you do not ask permission to own your wealth. You simply do. We live in the age of digital assets, blockchain, crypto, algorithmic currency, innovative, powerful, exciting. And yes, crypto may shape the future. Digital currencies may evolve global trade. But innovation does not destroy fundamentals. It reveals them. Crypto is fast. Gold is forever. Crypto is new. Gold is ancient. Crypto depends on electricity, networks, exchanges, and human management. Gold depends on nothing. Gold does not need the internet to shine. It needed no invention to exist. It was here before us and will remain after us. Technology builds new worlds, but gold survives worlds collapsing. In a balanced portfolio, gold is the anchor, the stabilizer, the unshakable core. Bitcoin may be digital gold, but gold is gold. And when trust resets, when economic cycle, when the world restructures, gold will again be the reference point of value, not because people are old-fashioned, but because people are predictable. Conclusion, you don't buy gold, you buy time. At the end of the day, gold is not about price. Gold is not about trading. Gold is about preservation, of purchasing power across generations. Gold is the story of human history written in metal. It outlived kings, presidents, governments, currencies, and ideologies. It represents discipline in a world obsessed with immediate reward. It represents truth in a system built on promises. It represents permanence in a world built on change. You do not invest in gold to make money. You invest in gold to escape the consequences of others losing control. When you hold gold, you hold history. You hold trust. You hold sovereignty. You hold wealth that does not ask permission to exist. Gold does not promise returns. It promises survival. It is not trendy. It is eternal. It does not rise because it is new. It rises because everything else grows old. And so we conclude with the truth at the heart of finance, civilization, and human nature. Gold always wins. Not because we choose it, but because time does. Real wealth is not money counted in a bank, nor the shine of assets publicly admired. Real wealth is something quieter, harder to see, and often ignored because it lacks the spectacle that people crave. When someone becomes wealthy in the true sense, the transformation is subtle, almost invisible to outsiders. It takes place internally, long before it appears externally. Wealth is the compounding of small, consistent decisions, the habit of saving when others spend, the discipline of learning when others are distracted, the patience to invest when immediate gratification whispers for consumption. Society measures wealth in numbers and displays, but real wealth is measured in resilience, in optionality, in freedom from fear. A person may look rich by driving the right car or wearing the right watch, yet remain fragile beneath the surface if their wealth depends entirely on someone else's approval or a paycheck that can vanish. Fragility masquerades as prosperity all the time, and most people cannot tell the difference until a crisis arrives. True wealth is slow because it aligns with reality. Nature does not rush growth. Trees take decades to mature. Oceans carve cliffs over centuries, and real fortunes behave the same way. They grow through repetition, not miracles. When someone focuses on building wealth, they learn to delay pleasure, to choose long-term benefit over short-term comfort. To accumulate real wealth means saying no to many things the world praises, because the pursuit of status and the pursuit of wealth often lead in opposite directions. The person showing off is spending. The person compounding is storing power. The world sees the spender, not the saver. The richest people you never notice are often the ones who have understood this better than anyone. Real wealth is also emotional fortitude. If a person panics under stress, if they react impulsively to every market move, if they require reassurance from the crowd to feel confident, they may have money, but they do not have wealth. Wealth is the ability to remain balanced when circumstances shake. It is the internal security that does not evaporate when asset prices fall or when the world enters chaos. When someone has real wealth, they are not dependent on constant growth to feel safe. They have built a foundation that can survive contraction. This foundation is invisible because it is built from habits, mindset, and discipline rather than material possessions. It shows itself only in storms, when the majority stagger and only a few remain grounded. Wealth is also freedom. Freedom from urgency, from desperation, from selling time to survive. Money bought too quickly often traps people rather than liberates them, because the responsibility of maintaining appearances becomes heavier than the benefit of financial success. But when wealth grows slowly and patiently, its foundation is strong. It becomes freedom to walk away from bad environments, freedom to think independently, freedom to build instead of chase. Wealth that endures does not shout. It whispers through security and silence. Many people believe wealth comes from opportunity alone, but opportunity is useless to those who lack discipline and self-control. Anyone can receive abundance, but not everyone can manage it. This is why inheritance is often lost and why sudden gains disappear. Without the character to sustain wealth, wealth becomes temporary. The world sees the outcome of wealth, but rarely sees the behaviors that built it. Daily consistency, thoughtful risk-taking, refusal to follow the crowd, clarity of purpose. People envy the results but avoid the process. They admire the harvest but ignore the years spent planting, watering, waiting. Real wealth demands patience with time and discipline against emotion. It rewards those who are willing to be unnoticed while they build strength quietly beneath the surface. What grows slowly grows deeply. What grows deeply survives long after the noise fades. Life does not move in a straight line, and neither do economies, markets, or civilizations. They operate like seasons, turning from growth to stagnation, from optimism to caution, from expansion to contraction. Most people resist this truth because the mind desires permanence. It wants to believe that good times will last forever and that bad times will never end. But cycles care nothing for emotion. They move with or without our acceptance. When a person begins to see life as a series of repeating patterns rather than isolated events, clarity replaces confusion. What feels unpredictable in the short term becomes almost obvious in the long term. Booms emerge when confidence outruns fundamentals. Bubbles inflate when hope drowns wisdom. Crashes arrive not as anomalies but as corrections, restoring balance to excess. This rhythm has existed for thousands of years. Yet each new generation believes it has become smarter than history, that this time is different. It never is. The faces change, the technology evolves, the tools become more complex. But human behavior remains the same, greedy in growth, fearful in decline. Those who understand cycles prepare while optimism blinds the crowd, building strength quietly before winter arrives. They also refrain from despair when decline takes hold, knowing that contraction is not the end, but the beginning of the next expansion. The seed of progress is planted in the soil of crisis. Cycles are teachers. They reward patience and punish denial. When you accept the inevitability of change, you stop chasing highs and stop fearing lows. You learn to navigate rather than react, to position rather than pray. Most people fail financially, not because they are incapable, but because they fight the cycle instead of flowing with it. They spend freely in the boom and tighten too late in the bust, always one step behind reality. But the student of cycles acts in advance. They recognize that stability is temporary, that euphoria carries risk, that decline clears excess, and that recovery emerges from decay. The world unfolds not as chaos, but as rhythm. The person who reads cycles sees the future, not through prediction, but through pattern recognition. The world applauds acceleration. Move fast, decide fast, grow fast, but speed without direction is chaos, and progress without patience collapses under its own weight. The greatest fortunes in history were not built by those who rushed, but by those who endured. The ability to wait is a form of wealth because waiting requires strength. People who rush invest emotionally, impulsively, desperately. They chase the feeling of progress rather than progress itself. Markets punish haste because haste blinds awareness. The impatient trader buys tops and sells bottoms. The impulsive investor assumes trends will last longer than they do. The person who mistakes motion for achievement runs frantically in place, confusing exhaustion with success. Patience, on the other hand, compounds quietly. When you are patient, you choose long-term gain over short-term validation. You allow ideas to mature, strategies to unfold, investments to breathe. Slow growth is stable growth. It sinks roots deep instead of stretching upward too early. Trees that grow too fast snap easily under wind. Wealth that grows too fast collapses at the first shock. Restraint is even more difficult than patience because it demands saying no. No to temptation, no to comparison, no to the ego that demands immediate reward. Real investors know that opportunity is infinite, but capital is not. They protect their capital as a farmer protects his seeds, planting only in the right season and refusing to scatter them recklessly. Restraint means saving when others spend, thinking when others chase, holding cash when the crowd fears missing out. It is easy to act, it is harder to wait. The world rarely praises the person who sits still during mania, yet history rewards them more than those who rushed in unprepared. Time is the ultimate multiplier. Not effort, not intelligence, time. Those who learn to align with time accumulate what others lose. Patience is not stagnation, it is control. Restraint is not weakness, it is power. Markets do not make people wealthy. Mindset does. Two people can receive the same opportunity and walk away with opposite outcomes because wealth is first psychological. The market reflects behavior more than numbers, and behavior comes from thought. Before a person can grow assets, they must grow awareness. If someone fears loss more than they value discipline, they will sabotage themselves. If someone chases excitement rather than wisdom, they will mistake noise for opportunity. Wealth demands emotional control because money amplifies traits. A disciplined mind becomes more disciplined with money, but a chaotic mind becomes more chaotic. People think investing is about strategy, timing, research. These matter, but they do not matter more than temperament. One can learn analysis, but few master themselves. The investor who cannot remain rational will sell when they should hold, buy when they should wait, panic when they should observe. The greatest risk is not market volatility, it is psychological volatility. Emotional storms destroy portfolios faster than market crashes. That is why self-understanding is the foundation of wealth building. You must know your fears, your triggers, your instincts. You must build inner calm that remains steady while the world shakes. Wealth grows like a tree inside the mind first, and only later does it bear fruit externally. A person who cannot handle $1,000 cannot manage $100,000. A person who cannot manage $100,000 cannot keep $1 million. Income is not wealth if the mind leaks faster than the wallet fills. True wealth requires alignment between thought and behavior. You earn by skill, but you keep by character. Money flows toward those who treat it with respect, patience, and clarity. Abundance follows identity. If you think like someone who protects value, you will create value. If you think like someone who reacts emotionally, you will destroy what you build. The greatest financial edge in the world is calm thinking under pressure. Danger does not announce itself. It grows quietly in the background, hidden beneath comfort and confidence. When things feel safest is often when they are most unstable. History shows this clearly. Markets crash after euphoria, not after caution. Empires fall at their strongest moments, not their weakest. People ignore risk when life feels secure, and that blindness plants the seeds of collapse. The unseen risk is the most destructive because you cannot defend against what you refuse to acknowledge. Most people focus on visible problems, but the real threats are structural: overconfidence, leverage, denial. When credit expands beyond productivity, the system becomes fragile. When valuations exceed reality, correction becomes inevitable. When people believe nothing can go wrong, everything can. The intelligent investor studies not just reward, but vulnerability. They ask, what am I missing? Where is the weakness? What breaks if assumptions fail? They look for pressure beneath the surface, like a doctor listening for disease before symptoms appear. A strong portfolio is not built by chasing return. It is built by minimizing catastrophic loss. One disaster can erase 10 years of growth, but one act of risk awareness can prevent ruin. The difference between surviving and collapsing often lies in the ability to see what others ignore. And yet humility is required because no one sees everything. Certainty is a trap. The moment you believe you cannot fail is the moment you are closest to failure. Awareness is wealth protection. Caution is not fear, it is intelligence. When you prepare for downside, upside takes care of itself. Risk hidden is risk multiplied. Risk recognized is risk neutralized. Most people chase wealth like a race, sprinting toward a finish line they never stop to define. But this pursuit blinds them to the deeper truth. Success is not about how much you accumulate, but how long you remain standing when others fall. Endurance is wealth. Longevity is victory, because markets will crash, economies will shift, opportunities will dry and return. The winners are not those who rise fastest, but those who remain after storms have passed. A fortune earned quickly is fragile. A fortune earned slowly is fortified. Endurance requires caution, risk management, emotional clarity, and humility. It means valuing survival over spectacle, sustainability over speed. People lose wealth not because they never made enough, but because they never protected what they made. They take on excessive leverage. They expand too aggressively. They believe the peak is permanent. But permanence is an illusion. Everything cycles, everything transitions. Those who endure build layers of protection, cash reserves, diversification, adaptable thinking. They prepare for winter even while summer feels endless. In life, in markets, in history, the organisms that survive are not the strongest or the fastest, but the ones most responsive to change. Wealth works the same way. You do not need brilliance to grow rich. You need resilience to stay rich. When you focus not on outshining others, but on outlasting uncertainty, you become unshakable. Time becomes your partner instead of your opponent. Instead of racing, you walk forward steadily, letting compounding work like gravity, slow at first, unstoppable over years. Endurance is the real power. Wealth is not a moment. It is a lifespan.